Welcome, everybody. Thank y'all for joining us on this Power Play Tuesday. We've got a really great presentation for you guys today, a really great guest speaker, and Michael Bernstein. He's going to be talking to you guys a little bit about the real estate market, specifically in Austin a little bit, and I guess probably somewhat about his company and his background as well, just to kind of give you guys a little bit of an overview of him, though. He is actually the CEO at the Geyser Group, and has been, I guess, kind of works on the head of development there too, as far as evaluating potential acquisitions, overseeing ongoing developments, and all of the responsibilities that fall in there as well. Michael holds real estate and finance and law degrees from the University of Texas. I'll have to say gig him to that, but I'm sure he'll give you his side of the story when we have him on here in just a minute. So before we do continue, and if you guys are familiar with Quest, you've been a part of our presentations or webinars before, y'all are familiar with this language right here. But please bear in mind that as we go through the presentation, Quest Trust Company, we don't provide any sort of tax, legal, investment, or deal structuring advice. So bear that in mind. This is for the purposes of your education, but if you certainly have questions or anything like that, we are available for that. And kind of going into that, questions you do have throughout the presentation, please put them down in the chat or in the comments box. It should be on the right-hand side of your screen, and we'll get those to Michael throughout the presentation. Then we'll have a little bit of time for Q&A afterwards. So without further ado, we'll go ahead and bring Michael up. Michael, thank you so much for joining us today. It's a pleasure and a privilege to have you on. And even though you did go to UT, I'll give you a break there. But let me see. I'll pull my slides down here, and if you would just like to jump right into it.
Yeah, thanks, Colin, and thank you to the Quest team for having me on. And excited for the Longhorns and Aggies to get their rivalry going again back in the SEC. Here, I think next year, and excited to talk today about a little bit about the Geyser Group. And today we're going to talk about Austin's housing market over the past few years, and then zero in on a little bit of a specific case study. I think before we get started, just a quick disclaimer, similar to what Colin was saying, everything we're presenting today is for educational purposes only. And so just wanted to make that clear. And I want to tell you a little bit about the Geyser Group. So we are an Austin-based real estate development and investment firm. And particularly our focus is on residential projects in central Austin, and both on the for rent and for sale side. I think one thing that sets us apart from some other groups is we both raise capital from investors and do day-to-day development work. There's some groups out there that do one or the other, but we actually do both, which sets us apart a little bit. The Geyser Group leadership team is myself as the CEO and head of development, and then my partners, Matt McDonald, Julie Jumonville, and Dan Graham. In terms of our current projects, like I mentioned, we focus a lot in the central Austin area, and specifically, even more specifically in East Austin. And so 8 of our projects are in Central Austin. We have one project, it's called the Johnny, up here a little bit north, that is currently in lease up, and that is a 76-unit apartment development. We have another that's under construction right now that is a 363-unit apartment development here in East Austin. And then we have a variety of deals that are in different stages of pre-development, and those are a mix of for-sale townhome developments and multifamily developments. This is another kind of overview of our portfolio. We have 2 projects that we have exited from, where we bought those assets. We either entitled them or managed them, and then successfully exited from them. Our completed project is that 76-unit apartment that I mentioned before, the Johnny. Here's our 363-unit apartment project that's under construction, and then the variety of other deals that are in various stages of pre-development. So turning to the discussion on the Austin housing market, really my goal today was to provide a kind of high-level overview of where we've been over the past 3 years since the onset of the pandemic and what that may inform us about where we're headed over the next few years. And to draw a little bit of a distinction between the for sale market and the for rent market, because while they're of course correlated, they do have important differences for their kind of the supply story and the outlook for both of them. So as y'all may know, Austin really boomed during the pandemic, and that was both on the for sale and on the for rent side. And so if you look on the for sale side, the median single family home price rose 45% in the period between 2020 and 2022. And you can see it just really seemed to go pretty much straight up over that time, maybe with like a short little dip right here. And there was a similar experience on the rent side in the multifamily market, where between 2020 and 2021, median rents increased over 35% in that time. And you can kind of see that here with this blue line, where you had rents going up rapidly and the vacancy rate, which is here in this orange line, dropping. So really strong performance on that side during the pandemic. And as y'all may have seen, there was some really wild headlines that came out as a result of this. The one that has really stood out to me is that there was a condo development down south where the development sold out in 5 hours. And so that developer put out the opportunity for people to pre-buy the units, and it sold out in less than 5 hours. Some other kind of headlines from that time that stick out are just, you see where this is an article from June of 2021, and the high-end home prices had jumped up 24% from 2020. So just in that short amount of time, you really had the market going crazy, to be honest. Now, one of the things that helped, that also was going on at this time, was that at the onset of the pandemic, the Federal Reserve dropped the interest rates to effectively zero. And as y'all probably know, those interest rates, they matter a lot for the real estate industry. And that's because of how much debt is used both in real estate development on the development side. And then, as we'll see a little later, it has a big impact on mortgage rates, which impacts buying power from homeowners on the other side. And so what you can see in this slide is this really low interest rate environment from the onset of the pandemic through, call it Q1 of 2022, is highly correlated with a large amount of construction starts on the multifamily side. And then if you'll recall, what we talked about before was this is also at the same time where the multifamily rent growth is experiencing high appreciation, and the vacancy was dropping and the occupancy was picking up. And so all of that really created a really favorable environment for getting new development projects out of the ground and starting construction. Now, what that has led to today is that there are a lot more multifamily units being built today than for sale units. And specifically, apartment construction in the Austin MSA is near all-time highs. So we have, estimates vary, but there's about 41,000 units underway, according to some estimates. And that's more than 3 times the 14,000 unit quarterly average between 2017 and 2019. And it's 50% higher than the 5-year average of 29,000 units. And you can see that kind of broken out in this chart below, where the forecasted deliveries going forward from today over the next few years are forecasted to continue to be at nearly historic levels. But I think one thing I want to point out here that's interesting to note is if you look at this period right here, call it Q3 2026 through the end of 2027, the forecast is that there are really not many deliveries at all. And what that is reflective of is the market has shifted to where today it is very difficult to get multifamily projects funded. That's certainly not to say that there aren't projects getting started. They are, but usually there's a unique story to them that supports the underlying fundamentals of the project. Now, with this increase in supply, we've seen an impact to rents, and this is again on the multifamily side. And so rents, as we were talking about before, were growing at really, really high levels in 2020 and 2021. And what we've seen over the past 4 quarters or so, if you look at these green and blue lines in this chart over here, that shows the Austin rents, both effective and asking rents. And those have started to drop over the past 4 quarters. Now, the really good news for the apartment market is the absorption, meaning the net number of units that have been moved into. Once you factor in people that have moved out, the absorption has been very strong. And so there's been about 7,000 units absorbed just thus far in 2023. And so while there has been a bit of a softening in the market, the long-term kind of fundamentals for Austin remain there with the population growth. Now, looking at what's happened on the for sale side, there's been a correlation between the interest rate hikes from the Federal Reserve, which is shown here, and a drop in for sale home prices here in Austin. And so the prices have come down from last year's peak. There's, a lot of these things, the amount of which it's dropped really depends on which 12-month period you're looking at and how you're handling, are you looking at median sales versus average sales, and really kind of like how you're cutting the statistics up. But one kind of metric here is on the median sold price, that's dropped 3% in the last 12 months. Now, I think what's interesting to note here is that even though you've had this dramatic interest rate run up, and again, what we talked about earlier is that those home prices increased roughly 43% over a 2-year period. It's only dropped 3% year over year. And then according to recent Freddie Mac data, and again, Freddie Mac is one of the government-sponsored entities that's involved in the mortgage lending business. So Austin home prices are up nearly 46% since March 2020. And they're only down a mere 0.24% year to date. So what that kind of suggests to me is that demand remains high, and those elevated prices, meaning the price jump that got us to where we are today, those seem to be here to stay. Again, we're down from the peak, but it seems like the market overall is stabilizing at this price point on these for sale homes. The other thing supporting that is that the population growth in Austin continues, and the demand remains strong for housing. And so a few data points here are that, according to Smart Asset, Austin ranked number 1 for millennial population growth between 2021 and 2022, with a net in-migration of over 10,000 individuals. There's also Austin continues to have a strong economy, with the North Carolina Business School projecting Austin had the 2nd fastest growing economy for 2023. There also continues to be strong interest from real estate investors. According to CBRE, Austin was the number 2 preferred market to invest in. And one indicator that's a little bit outside of the real estate world, but shows the overall desirability of Austin and its popularity, is that the Moody Center, which is a new entertainment venue that hosts concerts and as well as UT sporting events. It was the top venue of its size for ticket sales in the world, and it was the number 10 busiest venue worldwide. And that's according to the Austin Business Journal. Some more data here kind of showing the continued population growth is Bank of America published some internal data that they have, and what they're doing is they're tracking based on where accounts are moving to and the addresses of their account holders. They're tracking where they are moving to. And Austin was at the top of the list, both from 2020 to 2022 and from 2022 to 2023. And you can see that that pandemic era amount denoted by the blue bar graph, and then the amount from 2022 to 2023 shown in red. And in both instances, Austin had the highest net population change. Some other things that we've been taking note of is, so Google pre-leased a nearly 800,000 square foot building downtown. It's known as the Sail Tower. And there's recent articles coming out saying that they remain committed to that lease and that they've started building out 5 stories. And that's important because it shows kind of the continued momentum on the job side and to support the continued in-migration to Austin as those buildings become full. Similarly, Meta is starting to enforce an in-office mandate for its employees. And with their strong presence in Austin, we feel like that supplies another tailwind for continued Austin population growth, which in turn increases demand for housing. Stepping back to a bit of a more macro level, home building stocks are close to a 52-week high. And commentary we've seen there is that there's just an unquenchable thirst for new housing as buyers struggle with limited inventories and rising mortgage rates. And those rising mortgage rates are important to touch on because what you have right now is a lot of people in their existing homes are locked into mortgages from the low interest environment of the pandemic. And so those mortgage rates may be close to 3%, or even in some instances a little bit below that. And in order, if those homeowners are going to move and then buy a new house, they're going to be facing mortgage rates that are, somewhere between 6.5% and 7.5%. And what we've seen be the result of that is a lot less inventory coming online on the for sale side from existing homes, and the inventory that is being put online is from new construction. And kind of going along with the conversation about some of these large companies like Google or Meta and their commitments to office space, there are a few really large projects underway in Austin, and this is showing a few downtown. 2 in particular are this 6X Guadalupe, which is going to be finished in 2024, and that has 600,000 square feet. And Meta actually signed a lease for that office space. There are some questions about whether they are going to try to sublease that space, but with their recent recommitment to in-office work, there's certainly a chance that they end up using that space. And then another example is the Waterline building, which is off of Rainy Street. It's going to have an office component and a residential component. And just these tall buildings kind of speak to the overall growth story and the confidence that capital markets have in Austin. And what we're showing on this slide is the Austin's 2022 rankings for a variety of from a variety of publications. For example, Wall Street Journal naming it as the hottest U.S. job market, Smart Asset calling it the best housing market for growth. You've got Bankrate calling it the number 3 best U.S. metro place to live. So the overarching story being that while there has been a bit of a retreat from the COVID era peaks on the for sale side and the for rent side, the long-term view of Austin remains very strong. And so now I wanted to move in and talk a little bit, zero in on a kind of particular case study, specifically about missing middle housing in East Austin. Excuse me. And so first I wanted to define the missing middle. And so when people talk about the missing middle, they're talking about housing that is something between a detached single family home and a mid-rise apartment community. And so what you can think of are things like side-by-side duplexes, fourplexes, townhomes, and similar product types. And one thing that specifically has attracted us to this product type is that studies have shown that nearly 59% of millennials are looking for this specific type of missing middle housing. And a recent study published by KUVE has found that people in the millennial age group are those that are moving to Austin the most. And so if you kind of combine those two, that it's millennials that are moving in and missing middle housing is what millennials are looking for, it generates a pretty strong narrative and thesis of, well, there should be increased demand for missing middle housing. The next thing that I wanted to talk about, and kind of, again, this is zeroing in on East Austin, is there is, we talked earlier about the amount of apartment supply that's coming online. And we also covered the strong absorption there and the good reason for that supply coming, but ultimately that there is a lot of supply coming online there. If you instead kind of zero in on East Austin, and when I say East Austin, kind of defining this as the area that is east of 35 and bounded by 183 to the west, it's really the opposite story, where the supply that has historically met the demand for sale housing, those projects are finishing up. And so specifically, the biggest one here is Mueller. Mueller, as some of you may know, was a long-term, I think nearly 15-year redevelopment on the site that was the city's former airport. So over the past 15 years, that has been transformed into a mixed-use area with retail and office and a lot of homes. And specifically, there were nearly 2,500 single-family units built in Mueller. Mueller is now down to its final 10% of available single-family inventory. Now, another project that provided a lot of inventory over the past few years were these two projects that were done by Taylor Morrison. These two projects brought about 300 units online over the past few years. Well, these existing projects are almost out of homes, and certainly over the next few years, at current absorption rates, the expectation is that they will be out of homes. And then if we now turn to the potential supply pipeline in the future, that's what's shown by these projects shown in red, which are geyser projects, and then other projects that we know about in the area. And these other projects, the estimated delivery timeline on them is, somewhere between 2024 on the earliest end and 2026, maybe even pushing to 2027 on the other. And if you add up all of these projects that we're aware of, and you get to a rough total of about 550 townhome style units. And importantly, so that total supply number, the 550 units, that's projected to come online, like I mentioned, over the next, call it 3 years. That number is less than what Mueller and these Taylor Morrison projects delivered and what the market absorbed over the prior 3 years. And that is before taking into account the potential impact of this Springdale Green development right here. So this Springdale Green development is an 875,000 square foot Class A office development that is occurring, really kind of in the middle of East Austin and very close to all of these projects. To put that in context, if anyone's familiar with the Frost Bank building downtown, this is probably like 1.8 of the Frost Bank building. So imagine close to 2 Frost Bank buildings being placed in the middle of East Austin. And once a tenant moves into those projects, our thesis is that will generate a lot more demand for homes in the area. And we've kind of already seen that the pre-existing demand before any sort of catalyst like this already absorbed a number equivalent to the total amount that can be brought online by these known projects. And so the suggestion here being that if the demand starts to exceed the supply, which there's good reason to believe that would result in home prices in the area being pushed up. And talking a little bit more about the specific area, this is a zoom in on our 2 current projects, and you can see that Springdale Green development I noted is right here, and it is close by to the Mueller development here, that Mueller mixed-use development that is the former airport. And just generally with respect to East Austin and our East Austin townhome projects, there are really appealing drive times. And so the drive time to that Springdale Green development is just 6 minutes. You can get to East 6th Street, where there's been a lot of recent development over the past 10 years with office, residential, and retail. That's about a 12-minute drive away. You're 15 minutes from downtown, just 8 minutes from Mueller, 11 minutes from the airport, 13 from the University of Texas, and 16 minutes from Tesla's Gigafactory over here. So I think in addition to the catalyst that Springdale Green could provide for East Austin, just even before something like that happens, there's East Austin is very centrally located and very close to the population draws around town. And that is one of the reasons why Mueller has been so successful in building and absorbing nearly 2,500 homes over the past 15 years or so. So with that, I want to say thank you for the time. Thank you for listening. If you have any questions or want to learn more about the Geyser Group or our projects, please reach out, and would love to talk to you more about it. And certainly if anyone has any questions now, I'd be happy to talk through them.
All right, great. Thank you so much, Michael. I think it really shows kind of the wealth of knowledge you bring on the real estate side, especially in the Austin market. So I think, I don't think we've had any questions come through yet, but everyone, please go ahead and post those in the comments. And I think we've got a few. Just some information to run through on our end a little bit about Quest, some of the other events we do have coming up. And Evelyn, who is actually moderating today, is going to put a couple links in the chat. And that way, if you do have questions for her or myself, y'all can reach out to us, schedule meetings with us using those links. But there are just a few things I want to go through. Like I said, this is a promotion we have going on right now. So for any current clients, we are actually offering double rewards for our referral program. So typically $25 for the referee and the referrer, both sides of the party that are referring friends, family, whoever, to set up accounts with us. So we're bumping that up to twice the credit. Another thing, this is something that we've had working at Quest for a long time, kind of a little bit more in the background, and we're trying to share it with more individuals. If you are not familiar with our Gold Family team, they're actually a dedicated team to specific groups of individuals who typically, have a lot of investments, a lot of transactions, and they're dedicated to those, typically their families, those who have maybe multiple accounts, husbands and wives, sometimes even children, parents. So if this is something that interests you, please let us know. It's like I said, a dedicated service, typically expedited processing times. They'll give you annual reminders when contribution deadlines are coming up and helping you through the investment processes. So that's just something that we're trying to make a little bit more well known. This is the Elite Multifamily Summit that we have coming up in Irving. This is probably more of an Austin crowd, but if you guys are looking to make the drive up to Dallas, Fort Worth area, this is something we have coming up this Saturday, talking about multifamily real estate investing. So there's going to be a whole lot of different experts there, people who bring their own individual knowledge and perspective. So we're going to have Q&A sessions and panels and presentations from a lot of these people. So if that's something that interests you, please let us know. You can actually use my coupon code Taylor30. If you guys do want to buy tickets, you can scan that QR code or just go to the events page on our website. And then the last one is the Quest Expo. If you guys are familiar with Quest, if you've been following us for a long time, this is probably something you're more than familiar with. The last one we did was back in September of last year, so almost a whole year ago now. And this is the biggest event that we throw of the year. And obviously, you can probably tell for 2023, we haven't even done one. So we are trying to make it even bigger and better than it was the last time if y'all were here for the one in Houston. This one's going to be in Dallas as well, specifically in Irving. It'll be June 27th through 29th of 2024. So feel free to buy your tickets now. We do have early bird ticket prices. You're able to purchase those on our website. If you have more questions about it, feel free to let us know. But I mean, this is going to be an all-encompassing alternative investment event, right? We're going to have people on the real estate side, on the oil and gas side. It's if you're looking to diversify your investments, learn more about how to build wealth, this is a great place to do that. So I highly encourage you guys to check this out. Feel free to call us if you have some questions, you want some more information about it. There are different ticket prices, but I would encourage y'all to take a look at the website. There's a lot of good information there about it. So with that being said, I do want to go ahead and put back up. Let's see. Oh, Michael, do you want to put your information back up there?
Yeah.
Or at the very least, Evelyn, if you can put those down in the comments, that'd be awesome. Okay, so we do have, let's see, a question here from Sarah. Does the Geyser Group have its own property management company?
We do not. We work with third-party property management companies at our projects.
Okay. Perfect. And I do want to ask you, actually, if you would like to talk a little bit more about how you guys, help real estate investors, what sets you apart from other companies, that sort of thing, and specifically strategies, in the Austin market where y'all are focused.
Yeah, I think one thing that sets us apart is what I alluded to at the beginning, where we both raise money directly from investors and offer those investment opportunities, and we do the development work. And so there are some companies out there that do kind of one or the other. And specifically, what we've noticed is sometimes if companies just raise the money and then go invest with a developer, sometimes that can impact the terms that the investor is getting. And what I mean by that is, in certain instances, the developer will kind of take a cut of the returns, and then the company that is aggregating the capital will take another cut. And so what ends up going to the investor has been promoted twice, or there's been 2 levels of carry. And so what ends up going to the investor is less, and it can limit an investor's upside. So I think that's one differentiator for us is our investors there's only one level of promote. It goes to us on our deals because we do both aspects. And so that's one thing that sets us apart. I think something else that gives us an edge is, and I'm a little biased here, but I myself have a legal background, and other members of our team have legal backgrounds. And so that helps us. I think it helps us on the risk management side, just kind of knowing what's important to include in our contracts. But it can also help us on the land entitlement and other aspects of our deals. And so, for example, one of our townhome projects that I mentioned the location on today, we rezoned the land after we bought it. So that was a process that we were comfortable going through that some groups wouldn't necessarily do. And by rezoning the land, we really significantly increased the value of it. On the multifamily side, there are certain structures that we will go into and utilize that require more nuance and kind of more headache, honestly, to put them in place, but they come with a lot of value. And with our legal skill set and our comfort there, we're kind of more willing to go do those things than some other groups.
Okay, awesome. I don't think we have any more questions, but Evelyn did put Michael's email in the comments there, everybody. So like I said, feel free to reach out to Michael for any questions for him regarding self-directed IRAs or any of the events or things that I mentioned. You can reach out to us as well. But again, Michael, we really appreciate your time today and the experience and all of the expertise that you bring as well. So thank you so much for joining us.
Yeah, thank you so much for having me. And just please reach out if anyone has any questions.
Yep, absolutely. Well, hope everybody has a great rest of the day, and we will see you next time. Thank you guys so much.
Thank you.